Okay, so just having gone through the European cash close 4:30, just having a quick wrap up of events. I am mindful, keeping half an eye, the US President Donald Trump is speaking at the moment. But just wrapping up the day, as we normally do at this time, of the events and as they've unfolded. And as I wrote in the strategy report earlier today, I was a little bit surprised by the market's somewhat dovish leanings toward the overall digestion to the minutes we had last night. Granted, there are potentially other areas that they foresee might not be transitory, was kind of the comment, which meant that are they getting increasingly concerned by low inflation? Well, a key thing is we're going to find out more details on that specific front tomorrow. We have US CPI. But it did cause a bit of a reaction overnight. It's probably the close on Wall Street, if you remember, was a record high level. The dollar did weaken, so both pairs did rally at the time, as too did gold. But a lot of that's already been reversed, and I think that's down to the fact that net, as far as the Federal Reserve is concerned, the goalposts haven't changed. We're still going to hike rates. If you look at the Federal Funds Rate futures, which is the gauge of the expectation of what's priced in the short end for an interest rate hike in December, 86.7% now is the current level, and this time, or going into the decision last night, it was around 91.8%. So very similar, i.e. still, it's odds on that they're going to go ahead as far as the market is concerned for the hike in December. Going through then the rest of the session, one of the bigger moves that we did have, certainly looking at the charts visible at the moment, is the declining cable. That was a pretty quick, swift drop that we had, really down to two different factors. I mean, from the comments that came out, everyone already knew that the fifth round of Brexit talks was going to finish with no real progression at all. I don't think the fact that Barnier saying any comments that he did really, it's hard to pin it on one comment, but certainly this was the one that most of the papers are running, the word deadlock. And when he said that, it seemed to initiate or at least act as the catalyst for then some of the downside, and then coinciding with that, the pair broke technical levels of relevance through S1. We broke the kind of lows that were printed in yesterday's session that acted as support as well back at the beginning of the week. And so we saw a pretty quick extension of that move through S2 and below. So really twofold. That obviously explains the sterling weakness, but I think the reason why the move was quite strong today to the downside was also a byproduct of a recovering dollar, whereas we'd been weakening in the greenback for the last 2 days or so, and I think it was a little bit overextended with this dovish interpretation of what happened last night. So it was used as a bit of a chance to just pick up dollar at a relative low level. Looking at where cable trades at the moment, obviously we've bounced significantly, about 50 pips off the original low. Just looking at where we were flirting at the low with that price point of 31.50, we did briefly get below there at 31.47, but it failed to sustain any break. And really that will be an important support level going forward if this downward trend is to continue going forward, either today, tomorrow, and so forth. That being, again, that low point from the 9th. On this recovery, though, on the upside, likewise, 132 would likely act as resistance. That was the level of which you can see here on a 30-minute candlestick. You had the break. It came back up to the level before the big wave to the downside again. So there was a kind of classic opportunity there at that point in time with the original break, albeit it was a little messy, but using those previous levels as a reference point for that short. So on the recovery here, you'd be eyeing that as a top to this potential move, and you can see the recovery has indeed run out of a bit of steam over the last 2 hours or so at around that level. So certainly something to watch for this evening if you're sticking around and going into tomorrow's session. So Brexit talks continue to remain stagnant, lack of progression, and so there's nothing really much more to add because nothing's really been said or agreed at this point. Okay, other things that we have had some US data. Just a quick recap here, and what's being defined as a return to trend in terms of the jobless situation in the United States of America. You can see here highlighted was the hurricane effect. So there was a big spike in initial jobless claims over that period with Hurricane Harvey and Irma and so forth. However, we've basically come back to the kind of average level that we were pre that situation and that weather pattern occurring. If you're looking at continuing claims, when in fact continuing claims were at our lowest level since 1973. So again, the job situation, you would think any small outside risk that the next non-farm number might be equally as low, well, the statistics that are coming in would suggest that that's not going to be the case, and we should see, well, even if we just quickly bring up a trading economics and we look at the headline change in non-farm payrolls, it'll make a bit more sense of what I'm talking about. So this was the headline print in jobs, minus 33,000 that we had, which was a pure reflection of the impact of the weather on the headline change in non-farms. And so the jobs data that we've been seeing over the last few weeks would suggest now we'll get a spring back to some degree of normality pretty quickly. Did the data in the US have much of an impact? Well, no, not really. Maybe helping the dollar play was the fact that the US PPI numbers on the core basis did come in both 0.2 higher than expected, both month on month and year, and that certainly fits the mold of a stronger dollar, and some of that earlier weakness that we had in gold, albeit that has now yellow metal bounced off that pivot level. Just quickly wrapping up then with oil numbers. I was off the desk, but Piers has got me up to speed with what happened with the oil inventories. So putting it back on a minute chart, you can see that, as always the case, very volatile in the initial reaction. We rallied then up to a decent 30-cent gain before dipping back to now retest the post-inventory highs, which were seen here at that 50.61 level. Now the upside bias in reaction, if we just quickly recap the numbers, remember we used the API release as our benchmark last night. That was a build of 31 million, so investor expectation was for a build of 31 million, and then bang, you get a drawdown of 2.75 million. The complete opposite. Now the two numbers should theoretically fit in some sort of correlation, because they're essentially measuring the same thing, albeit the methodologies might be slightly different. But this was a stark contrast of market positioning of expectations severely not being met. So a drawdown of a fairly substantial size against what was expected, and hence we had an initial spike up on the upside. At the same token, Cushing was a build, but pretty much the same as the APIs. Probably the one thing that tempered the gains was we had a gasoline draw last night of in excess of 1.5 million, and that was the complete opposite. That was a build of 2.5 million. So a real bit of a mess between what the APIs were telling us to what the DOEs came out as. And then to finish things off, we had US output was actually down 0.84%, which of course would be bullish. So on the balance, I think the headline figure here, the fact that US output down 0.84% is fairly substantial. We're back below 9.5 million. So we have maintained some positive bias in the price comparative to where we were pre the DOE release. So pretty tricky around the time of when it was happening, but we've recovered now back to that S1 level. I'd say that's a pretty decent level of resistance on this recovery that we've seen, it being S1 and also that low that we had yesterday afternoon. So that would be a level I'd just be keeping an eye on. Okay, so that was the oil story. Otherwise, equities pretty quiet as per usual. Not really too much to speak of. It's not really been the asset to focus on through really 2017, given the low levels of volatility. If we are to claw any further gains into the close in Wall Street, then obviously the all-time high, this kind of double top, will be a key level to be monitoring as the session goes on over the following hours. So 25.53.5 in the S&P. We have had a couple of bank earnings, I would say unsurprising in a way. JP and Citi getting proceedings underway for the banking sector. EPS revenues exceeding, but net incomes in regard to the specific trading division down, but they've prepped the market up for that to be the case, so no real great surprises. We'll have other banks to come tomorrow. Just before I get onto the calendar for tomorrow, one thing you've probably read about was Bitcoin. We don't look at Bitcoin particularly closely ourselves. There's not a product that we would trade here at Amplify, but obviously I know a lot of you guys at home do look at it, and obviously today is a significant day and a real case of the psychology of the way that this market operates. If you think of where we were trading back in kind of late August, this is when we were just at the peak of 5,000. People kind of bailed out of the trade at that level, being a big psychological barrier to the upside. And then we had this whole ruling about IOCs being illegal, Jamie Dimon saying it's a fraud and so on. We had a big sell-off. Then we've come back, we've hit that 5,000, and we've just exploded higher again today. So we're printing, as I speak, 53.14. A print in Bitcoin, we're up over 10%. But a really good, as ever the case of trading this as an asset, it's hugely psychologically driven, in addition to its reliance on technicals as well. And the breach of that 5,000 certainly has seen it catapult higher again. And looking at the crypto space today, you can see Bitcoin leading the charge up over 10%, and the others seeing some pretty decent gains overall. Okay, looking at the rest of the session for today. If you are sticking around, there is one chap that I said before you probably want to keep a close eye on, and that is, so let me just show you what I was looking at with Bitcoin. If I wasn't showing my screen, that was the 5,000 level here, which was the previous high, and then hence the big break higher that we've just seen out at the moment. Okay, just quickly going back to the charts before I move on. Just seeing oil spiking higher. Just seeing if there's any comments here. US House Speaker Paul Ryan says we need a comprehensive strategy on Iran. We do not have one. Ryan says Iran actions have gotten worse since the nuclear deal. US said to make proposal that could kill NAFTA after 5 years. A couple of comments, but we were looking at that level technically was relevant. The break of that, obviously, it's just seeing prices as well spike up quite aggressively here. So that was that 50.63 that we were just looking at a moment ago. Push through that level. Could well just be accelerated by the fact some stop orders just getting triggered as well. Okay, just quickly then, looking at the calendar, if you are sticking around in the FX markets for sterling, do be aware you've got Bank of England's Haldane delivering a text for a speech at 6:45 p.m. I actually think he's probably one of the most important ones to watch, given his recent commentary has erred on the more hawkish side. And by that, I mean that if the Bank of England are seriously going to deliver on the market pricing of a November hike, you would think that he should be really upping the ante, talking hawkishly. Personally, having conversations here on the floor, I think it's a bit of a stretch to think that that will ever materialise in the wake of the political uncertainties, the kind of rate hiking cycle, if you like, is one and done, even worth entertaining from a Bank of England's point of view. And there's lots of other economic arguments to go against hiking of rates, and inflation obviously being the one that's against that and supports the case. So what Haldane has to say could be very interesting. That's at 6:45. And then he speaks again just before the US close, as to does ECB's COA. Looking ahead to tomorrow, just to wrap things up, and the morning is pretty quiet again, but what's really going to be important is the US CPI data. That's going to be a real of real interest, which might equate to an even quieter European session as investors sit on their hands and wait for that, because that is the real key area which the Fed, as we heard last night in the minutes, are focusing on. Alongside this, we'll also get retail sales. So you've got a double whammy tomorrow of important Tier 1 economic data, and you also get preliminary University of Michigan report as well as the US rig count. So certainly a lot to come. We finished the the session and the week on the best kind of scheduled calendar that we've had to offer. So the best is yet to come, you could say. All right, that's it. Going to leave it at that. Hope you've all had a good day. Good luck to anyone sticking around and trading on through the evening. And I'll speak to you again tomorrow morning. Thank you.